It's Matt Santacapita from the Santa Sells Houses team, and this is another Monday market update. And happy Easter Monday to everybody. We've got young kids, so Ethan's playing in the back, Gavin's in the front. But anyways, a little bit of daddy daycare duty today, so coming from my backyard. Let's get into the numbers. So this past week in the City of London, we saw new listings come in at 117, conditionals at 58, and solds at 106. Now, pretty kind of steady, normal numbers, very consistent here. We haven't seen any big upticks or downticks. Still on pace for what we've seen for the past, call it 8 weeks. I will say this though, the one thing that's interesting is, as a March highlight, let's say, is inventory levels overall in our board. So this is not just the City of London, this is Elstar. In February, we had 3 months worth of inventory, and in March, we ended with 2 months worth of inventory. And I think what that goes to show us is that obviously, start of last month and even, tail end of February, we were talking about seeing the number of sales increase and the number of buyers out there increase. So that brings validity to that statement because obviously we shaved an entire month's worth of inventory off. Now, the downside to that, if you're a buyer, is generally speaking, when there's less inventory, what do you see? Prices stabilize even more, and in some cases, prices go up. So it's going to be interesting to see where things go in the next little bit here. Another thing to note is the average home price for March in the City of London, in our board, in Elstar, London St. Thomas Association of Realtors, we ended at 653,611. Now this represents a year-over-year decline of 19%. But if we also do wind it back to, call it pre this massive run-up, when that started in 2020, so 2 to 2.5 years ago, call it, home prices are still up, 40 to 4, I think it's 45-ish%. So it's still a very robust market. Now, the big thing that's coming is in 2 days, so this will be on Wednesday, the Bank of Canada has their overnight lending rate announcement. And what we're expecting, and I think what generally everybody is expecting, is that the Bank of Canada is going to leave interest rates where they're at. I think they've accomplished what they wanted to accomplish, which is slowing down of certain aspects of the economy. I think the one shocking thing that we have seen recently is the job growth numbers are significantly higher than arguably where they should be, given we've never seen historically interest rates rise as quickly as they have. So Wednesday is going to be a very interesting day. Again, I think what we should expect is basically no news. They're going to say rates are staying where they are. Long-term forecast, I think at the end of the day, the Bank of Canada probably needs to shave 100 basis points off the overnight rate. I don't think that's going to happen in the next month or two, but call it in the next 12 to 18 months. I think that's what we can expect. So who knows though? Time will tell. So again, it's Matt Santacapita from the Santa Sells Houses team, and this is another episode of our Monday Market Update.